Hello, everyone. Welcome to our webinar of today's session. It's all about gold, and we have today the expert David McAlvany on the call joining us. He is from the US, and he's served as a wealth manager at Morgan Stanley, and it's at the second generation of the family office McAlvany Financial Companies. He's also often speaking in TV, like CNBC, Fox News, but also joining seminars about finance around the world. So thank you very much, David, for your time today. It's great to have you. And we are very much looking forward to this intense and very interesting discussion about gold. So if you maybe want to start and give a short intro about yourself as well before we go into it. And in the same time, I start a little poll to see how our audience today are investing and have and hold gold. Maybe we can already see, David, that with the poll that we have some in the group today joining us who have gold as coins, some have jewelry, and some others have others. So there is no one who has so far financial products. It will be very interesting to see how you can invest in financial products to get gold. And so I would like to hand over to you, maybe give a short introduction, and then maybe you want to right away get started and tell a little bit about the history of gold and how it became an investment.
Sure. So I'll give a little bit of background. Our family has been in the precious metals business for 50 years, 49 years. We started in 1972, and we started here in the United States a few years before it was legal to own gold. Gold had been treated as our currency up until 1933. We went through the Great Depression, and as a way of trying to solve the Great Depression, our central bank wanted to control all the money. And so they made it illegal for US citizens to own gold, and we could not own it from 1933 until January 1st, 1975. Our family, along with two other families, was involved in getting gold legalized in the United States in that time frame. So we have kind of a tie-in to the history of gold in the shorter term. I think the fascinating aspect of the history of gold is really just how basic it is. It has been money for 5,000 years of recorded history. When we've gotten off track, treating it as something else and getting creative with money, bad things have happened. Whether it's the Hungarian hyperinflation or the German hyperinflation, what we see in Venezuela now, we even in the United States, since we came off the gold standard, let's say, right around the end of World War I, we've lost 96, 97% of the purchasing power of our dollar. It takes so much more in terms of income to buy what we used to buy for very little. And that's a story of the degradation of our currency. It's happened over a long enough period of time, nobody cares. If it happens in a year and all of a sudden this year's income doesn't buy groceries, people panic because of quote unquote inflation. But if inflation is spread out over a long enough period of time, then people tend not to care. So the history of gold is really the history of money. And the history of money is about people trying to do something better than what we find in nature. So today in the United States and around the world, we are on what we call the PhD standard. We have confidence not in a tangible asset, but we have confidence instead in what we consider to be the very smartest people making decisions about the supply of gold and the level of interest rates and things of that nature.
Very interesting to get a little bit of insights of the really history of gold. And I think it has always been kind of like a product or a metal, precious metals that has a long value as well for the people, also on a personalized level. And I think also now, am I right that the majority of gold as an investor is done by companies and not so much by individuals anymore?
Well, so there's three main sources of demand for gold. Central banks buy a lot of gold. Individuals buy it typically in the form of jewelry, and then investors will also buy gold. And that's where you find it in a variety of different formats. Some people prefer to own the physical product itself. Some people like to buy, like you're buying a stock. You can buy gold using a symbol in a portfolio and have the equivalent of ounces that are designated and owned by you. Now, you can't take delivery of them. You can't take them home with you. So that's why there's if you want to have the metal in your hand, then owning coins or bars is different than buying a paper variety. All of them have value and all of them are worth consideration. But the three main demand sources for gold are jewelry, which is kind of industrial demand, central bank, and investor demand.
And we often hear that gold is performing exactly the opposite side when the market crashes. Why is this the case? And gold is also very strong in, if there is a crisis, a lot of people start buying gold. It gains on value. Mm-hmm. Why is this the case? From where does this come from?
Well, this goes back to the history of gold, which is very basic. It's like cash. When you have volatility in the stock market, do you sometimes sell stocks and go to cash? Because in the past, that meant going to gold. If you look at any of the past periods of pressure within the financial markets, going to cash was the same thing as going to gold. And when you then have other factors like central banks printing trillions and trillions of dollars, now there's extra motivation. Instead of just going from stocks and bonds into cash, you might choose gold as an alternative to cash if you don't have confidence in the ability of that currency to maintain its value through time. Many currencies this year, take for instance the Brazilian real, they've lost close to a quarter of their value this year. So every dollar you save, you now have 75 cents. If you were saving in that currency, you might say, well, I would rather be in something that will at least maintain its value rather than decline in value. The same thing is true in Argentina. Last year, it was close to 45% devaluation in 1 year. You save a dollar, or in this case, Argentine pesos, you're talking about losing 45 cents.
Is there another precious metal that's similar or performing and behaving similar to gold, like silver or platinum? Or
when you look at precious metals in general, you do have silver and the platinum group metals, which is platinum and palladium, which can be good assets to invest in. Gold is the very best. Gold does not have as many economic sensitivities as the other metals do. So for instance, right now we have COVID-19, the world is slow in terms of demand for cell phones and computers and things that we would normally see bought and sold in the economy, right? So there's a lot less activity right now. So that means there's less platinum being used in catalytic converters in vehicles. There's less silver being used in flat screen televisions and cell phones. And because of that demand destruction, there's pressure downward on the price. That's not the case with gold. Gold continues to rise because it doesn't have as many industrial uses and thus economic vulnerabilities. So in that sense, gold is the very best insurance of all the precious metals and should be a part of every portfolio to offset currency risk and to offset volatility in other assets, whether that's real estate, bonds, stocks. It is kind of an insurance, if you will. It does, as you said earlier, it goes up when other assets tend to go down.
And as we have seen in the poll questions that I did run in the beginning, no one in the call today is so far invested in gold, besides having maybe a couple of coins or bars. Is there a way today with ETFs and other financial products that makes it easy for a private investor to invest in gold? What's the easiest and simplest product in the market at the moment?
Yeah, Well, I mean, with full disclosure, we have a product that fits that bill, and there's many others like it. If people want to do sort of side-by-side comparisons to see how our product stands up against others, but so when you buy gold, typically you would take delivery of it or store it at a bank, and there's logistics involved. So it has to be sent to you in the post by the post service. It has to be insured. It could take weeks to get to you. All of these are reasons why in the 21st century, some investors just say, I'm not interested. What we created in a program called Vaulted, and if you want to look at it, you can do that at vaulted.com. The Vaulted program allows you to buy gold in any dollar increment and own either partial or a complete kilo bar of gold. It's stored with a very reliable counterparty. It's a Crown property, the Royal Canadian Mint in Ottawa. So North America, safe jurisdiction, rule of law is in place. It's at a Crown property that's been handling gold storage and logistics since the early 1900s. So that they know what they're doing. So you can go online and buy $5 worth of gold very inexpensively, or $5 million worth of gold very inexpensively. And it's just as easy to sell as it is to buy. So what we've tried to do is create a vehicle that allows you to use gold as a savings vehicle. Maybe it's not in Swiss francs, maybe it's not in pounds sterling, maybe it's not in US dollars, but you say, for this portion of my retirement or my savings, I want it to be denominated in gold. And it's very easy when you change your mind and you want to go spend that gold to liquidate it and have it back in your bank account in less than 48 hours.
So the liquidity of gold is very easy and very high. Okay.
It is in this 21st century format. It's not as liquid. There's a wide market for it, and there will always be someone to buy it. But if you have a Swiss Helvetia or a British sovereign or an American eagle, you have to go physically find a buyer, or in reverse, ship it to someone, have them receive it before you can sell it. That's not the case with the Vaulted program. The Vaulted program, you go online to vaulted.com, takes you 30 seconds to open an account. It takes you no time to transfer funds over and to place a trade and to reverse the trade, have it go right back out to your savings account or checking account, whatever banking relationship you have. It basically, I think, is one of the best ways to own gold in the 21st century.
And this Vaulted account, is that a global product, or is it just available for the United States?
It's available to any investor anywhere in the world.
And what do you think about ETFs, exchange traded funds? They are offering also gold since a couple of years. What do you think about that? Or is there anything you would need to be careful about in general if you look at financial products? What is important? I think liquidity, of course, probably is one way. Are there other elements that you need to be careful as a private investors when you want to invest in gold?
I think a couple of the elements that are sort of negatives for exchange traded products or exchange traded funds, unless you're taking delivery of very large quantities, delivery is not allowed. With our program, these are allocated ounces. If you want them delivered to your door, we can arrange for shipping to have them delivered to you. So the physical qualities are not removed. If you want the physical asset, portable, private, and in your hand, we can accommodate that. Most of your exchange traded products cannot. I do like the exchange traded products as they're easy to buy and easy to sell. They just introduce certain layers of risk, because now you are reliant on counterparties. You're reliant on other financial entities to do what they say they will do. In the case of Vaulted, you're just talking about buying a metal and storing it in a particular place. There's the counterparty exposure that you have is very different. It's simplified. It's preferred, in my view, to what you have with the exchange traded funds.
And how is it about the fees? So in general, for gold, is there a high fee compared to other financial products or other precious metals? How does that behave from a fee perspective? Because, I mean, you need to store them somewhere, so that costs, of course.
Yeah, the two things that you would expect is a transaction fee to buy or sell and a storage fee, because the metal itself has been purchased and placed somewhere. You are taking up someone else's secure space. And you want that to be the case. That is a fee that, while it may be annoying to pay it, validates the product and the fact that it is spatially located someplace, right? So we have with Vaulted the same fee structure as you have with an exchange traded product. It's 40 basis points, so 0.4% is your average, is your storage cost on an annual basis. And if you're only there for 10 days, then you only pay for 10 days of storage. Everything is done on a pro rata basis. But it's the same ongoing fee structure as something like GLD.
What is GLD? Maybe you can expand on that a little bit.
GLD are the three letters that make up the ticker symbol for the largest exchange traded fund, which is gold stored in London instead of gold stored in Canada. We use kilo bars. They use 400-ounce good delivery bars. Their product is not deliverable unless you're taking delivery of over $10 million. Ours is deliverable in any quantity. So there are differences, but our cost structure is very comparable.
And when is the right time to invest in gold? Is it, like you said, I mean, in the crisis, it performs very well, right? It's like holding cash. So no one knows actually when the crash comes and when the next crash appears. What is your suggestion? When is the right time to start investing in gold?
Again, I tend to think of gold as a form of cash. It's just not pound sterling, US dollars, Japanese yen, or Swiss francs. It is the most enduring. It is the longest form of currency to ever exist. So when is a good time to own cash? When there's volatility in the stock market, when you anticipate something else going on sale. We have a phrase in the US that, it's best to buy straw hats in winter. So rather than buying them in the heat of the day when it's hot and everyone wants a straw hat, you buy your straw hats in the wintertime when they're 50% off. I want to have cash so that I can spend it effectively when things go on sale. So what are all the asset classes as an investor that I'm interested in? I'm interested in stocks. I'm interested in bonds. I'm interested in real estate. I may be interested in running my own business. There are different avenues for me to invest my savings. And so to me, to own gold is just to say, I want a part of my cash, not in a specific currency, but in the only currency which has endured through 5,000 years of history. And if I can keep it liquid, then I can put it to use when something is on sale. So the stock market goes down 30%. Is it a good time to sell gold and buy stock? Sure. What if in you live in Berlin, or you live, wherever you happen to live, when real estate is a value, you take your cash and you put it into an asset class that you think makes a lot of sense from a growth standpoint, from an income standpoint, what have you. I think gold is something that should be in every portfolio. Now, if you wanted to back away from that philosophical idea that gold is cash and you should always have some, then obviously there's better times to purchase because the price is doing this constantly. The price is up today, down tomorrow. And gold and silver, like any other asset class, it's better to buy when they're cheap than when they're expensive. And so, there are seasons of the year where gold tends to be more expensive. And a part of that is driven by demand. So we think of gold in terms of the love trade. It goes up during the Indian wedding season. So when we get to the end of harvest and brides are getting married and gifts are being given, Indian demand for gold in the August to September timeframe ends up spiking, and the price ends up spiking. So do I want to buy gold in that August to September timeframe? No, because you'll be paying a higher price given the demand dynamics in India. So be aware of the love trade and understand that maybe you should buy May, June, July, a period of time where typically the price is lower than when Indian demand is on the increase.
Yeah.
Things like that, I think, will help your listeners make a more intelligent timing decision.
Interesting. And We were just talking before the asset allocation and kind of like what kind of assets and how big the percentages of your portfolio should be. And we received the question from Robert about Ray Dalio advises that you should have around 10% of assets in gold. What is your suggestion, and what do you think is the right number about it?
Yeah, I think 10% is a very good number. Now, when you look at your total assets, this would be net worth. 10% is a very solid number. For most people, what you'll find is that 10% of your total net worth equates to about 1/3 of your liquid assets. So you might be worth $300,000, but only have 100,000 of that which is actually investable, because maybe you own a business and maybe you own some real estate which you live in, your primary residence. And so what do you actually have to work with? It ends up being a smaller number in terms of your liquid assets. That number could be anywhere from 25 to 30% of liquid assets invested in gold. And we think of that in terms of something we call the perspective triangle. The perspective triangle is a way of organizing your assets according to certain tasks or mandates. So for instance, if you draw a small triangle, just go ahead and take a moment, draw a triangle. On the right-hand side of the triangle, this is what we would call liquidity. Liquidity could be your cash balances. It could be what you have in a savings account or things like that. And you need that. You need that to pay bills. You need that to buy groceries. You need that in case you have home repairs or a car that needs fixing, what have you. Liquidity also gives you the ability to buy other things if they do go on sale. So liquidity is an important mandate to have. The left-hand side of our investment triangle, what we call the perspective triangle, the mandate is for growth and for income. And there's a whole list of things that go into growth and income: stocks, bonds, mutual funds, exchange-traded funds. There's a variety of insurance products which may, whether it's annuities or whatnot, things that fit the growth and income mandate. The base of the triangle, the bottom, is what we call insurance. And we think of gold and silver as performing an insurance function. It insures against currency devaluation. It insures against stock market or other asset class volatility. And it represents an offset. So stocks and bonds go down. Typically, gold is going up. And it creates that balance so that you don't have as much risk in total for your portfolio. Ray Dalio says 10%. 10% of your assets, all of your assets, is about the equivalent of what we would put there at the base of that perspective triangle, 25, 30% of liquid assets. So
interesting. And is there a minimum amount that you would suggest as a, if I start investing and I maybe start with a couple of products, is there a minimum amount that I should consider putting into gold if I maybe don't have 100,000 to start investing?
Yeah, what I set up with Vaulted was something that was approachable even for my kids. I have a 13-year-old, an 11-year-old, a 9-year-old, and a 6-year-old. And I wanted them to be able to buy something with their savings and be able to put in $5 or $10. And so we are not, in that sense, Vaulted is not made for a pretentious client base. It's made for anyone. Mm-hmm. And we had in mind that this would be a vehicle that provided reliable savings for the entire world. Reliable because, frankly, fiat currencies, that is just paper currencies, have proven to be very unreliable. Very unreliable. So reliable savings for the world, starting with my kids. And that means, no, it's not $100,000. It might be $5.
Okay, so it's really for everyone. You could even start buying it for your godchild or your kids. That's right. For a long-term investment, so that you give them something very liquid, but something that also keeps its value over time.
Yeah, and I would just say this. What you do with gold, the most important thing about owning it is what you do next. Because if it's a reliable form of savings, then at some point, there is a value proposition that you're responding to as an investor, which is absolutely compelling. Maybe it's the house that's down the street that goes on sale and it's just too cheap. All right. Why do you have gold? You have gold for what is next. You have gold to be able to buy an asset like that, or to be able to buy stocks when they're inexpensive. So a part of gifting gold and a part of thinking about the role that it plays in your portfolio, it is, for me, cash. It is a reliable form of savings, but it's very important that you be willing to put it to work when it's appropriate. This is what makes your program so remarkable, because I think you get to have an ongoing conversation about what value looks like. How do you know when stocks are cheap or when they're expensive? How do you know when real estate is expensive or when it's cheap? And if you are investing and saving for the future, you should always be putting money into stocks and bonds and into real estate and into gold and silver. But you should be doing it when value is compelling, not because you have to, but when things make sense, when the value proposition, when your long-term rate of return can be positive and you're not taking a lot of risk. So I think gold is one of those things that you say, I own it today. It's a way that I secure my savings, and I am willing to spend it tomorrow if the right asset comes along and the price is right.
Okay. And it exactly matches perfectly well with the next question we've got. Bank of America is predicting that gold will go to 3,000 an ounce in just 18 months. Do you have a view on where it can go in the next couple of years, given the big uncertainties in the market out there?
Yes, I think 3,000 is a very easy number to get to. And a part of that is because the world's central banks are trying to engineer growth within the global economy. And they're doing, you've seen this with the European Central Bank. You've seen this with the Swiss National Bank. You've seen this with the Bank of England. You've seen this with the Federal Reserve. They are trying to engineer growth through the creation of money. And it's, in essence, what they're doing is guaranteeing, because they're creating trillions of dollars, that gold gets repriced. It's not so much that gold is going up, but that all of those global currencies are coming down, and it takes that many more currency units to buy the same ounce of gold. Does that make sense? The story of gold going higher is really the story of savers losing out in this period of history. If you chose the wrong denomination, British pound, Swiss franc. Swiss franc's not that bad of a currency. The interest rate is bad. The interest is subterranean.
The interest rate is really bad. Yeah.
Oh, it's insulting. But as the value of currencies come down, it takes more of those currency units to buy the same ounce of gold. And this is one of the reasons why I think 3,000 is a very easy number to get to, because the Federal Reserve here in the United States has already said, we'll do whatever it takes. Just like Mario Draghi said in 2011, we'll do whatever it takes. They are willing to print an infinite number of dollars. So think about this, just use this as a thought experiment. If the global central bank community is willing to print an infinite number of dollars, then how high could the price of gold go? It reflects more currency units to buy the same ounce, finite supply of gold, infinite supply of currency, 3,000, 10,000, 100,000. All you're doing is marking out in currency units the death of those currencies. So look at gold priced in rupee or yen. You're talking about, it's already 60,000 yen, 70,000 yen, 140,000 rupee. Is gold really worth 140,000 currency units? Absolutely. What it tells you is that the Indian currency is on a death march. Any currency can go the same route. Any currency can go to the same route. That's one of the reasons why I think gold is an appropriate savings tool. And yes, I think 3,000, in answer to the B of A question, yes, 3,000 is easy. In US dollar terms, gold should get to about 2,800. That's its inflation adjusted value. Typically an asset class gets to that sort of economic equilibrium and then doubles. So my view is that gold getting to 3,000 is a stopping point on the way to 6,000. At 6,000, just in economic terms, it's not sustainable. It should be closer to 3,000, right? 2,800 is its long-term inflation adjusted price. And so getting to 3,000, sure. Getting to double that number, very possible. These are my views.
Interesting what's coming up here. We get another question based more for Switzerland. So I'm curious if you will be able to answer that. In Switzerland, we are familiar with Swiss Gold Refinery bearing the LBMA accredited hallmark. Can you better outline your gold accreditation?
Yeah, so this is one of the things that we liked about working with the Royal Canadian Mint. The Royal Canadian Mint is an established producer of kilo gold bars and of other products too, 400-ounce good delivery bars, and even small 1-ounce product. It's generally recognized anywhere in the world. This is not a private mint. This is not, David McAlvany's personal mint. This is run by the Crown and is accepted globally. When you look at refinery hallmarks, this is one of the ways of verifying purity of the product. And I think one of the things that I like about the Royal Canadian Mint, even above and beyond the Swiss refineries, is that the Royal Canadian Mint has guaranteed that all of their product is conflict-free. Not everyone in the world cares about these things. Not everyone in the world can source enough product from mines to then refine and be able to make that claim. Much of the product that comes through Swiss mints has come from many places. Maybe it's been sourced through the United Arab Emirates, and that tends to be a collecting hub for the Congo and Ghana and places where you might hang a question mark over, who is doing the work and were they adequately paid, and was child labor involved, and I love the Royal Canadian Mint and the fact that not only are they recognized globally for the purity of the product, the fineness of the product, but also the integrity of the product. And that integrity piece is that guarantee that the gold is conflict-free. Which is really important, I think, to consider. Yeah. There was a second question from the same person, from Isabella. It's not clear to her exactly how the custodian process works. Can you maybe talk a little bit more about that? Sure. So, think about an agreement with a storage facility. Maybe you've collected too much junk in your life and there's no room for you in the garage. So you go and you rent space, and it's someone else's space. But for the time that you've said, this is my space, it's your stuff that is in that space. And so that is essentially what we've done with the Royal Canadian Mint. We have carved out a space within their secure location where someone who owns 1 ounce or 100 ounces or any number of ounces, it is their product. There is no strings attached to it. It is very clear whose product it is, and no one else has a claim to it. Right, so you've basically designated a space within the Royal Canadian Mint where your product exists, and that is the very best way to own gold. There's other arrangements which can be made, and sometimes people will, and this happens very often in London vaults and even in Swiss vaults, where governments will take the gold that they have and they'll lease it, they'll loan it out, and now all of a sudden it's not just the gold there, but there's this contract relationship which separates the owner from the person who's borrowing it. We don't want anything like that. We want the simplicity of you own it, it's in that particular space. Maybe that answers the question. If not, I can perhaps. So really to have the direct investment into the physical product that's somehow, right? So that's right. Important. That's right. We were talking before about the raising price of gold, and we have seen in the couple of days the big news about the oil price. Can something like that happen to gold, that it kind of like goes to minus like it happened to oil? And maybe if you can also tell us a little bit about how this even could happen to the oil price. Sure. Let's start with that and then talk about gold as well, because with what happened with the oil markets, it's not like a barrel of oil became worthless. A barrel of oil is a barrel of oil. There's some degree of utility value or intrinsic value because it's going to get used for transportation or energy or what have you. The barrel of oil last week, Monday, did not go to negative zero. What went to negative $37 a barrel was a contract. And the contract deals with, there's several different aspects to a contract. On the one hand, you have the price of the commodity, you have the commodity itself, and then you have the obligations attached to it. And the obligations are what made it go negative. The obligations are, you must deliver a barrel of oil to Cushing, Oklahoma by the end of the month. Guess what? There's a problem. There's no more storage in Cushing, Oklahoma. The contract says you have to deliver it to Cushing, Oklahoma, and only Cushing, Oklahoma. Only. Mm-hmm. But if the storage is full, where do you place it? So this is where all of a sudden the contract obligations became the dominant factors above the value of the physical asset and the normal pricing of the product. So could that happen with gold? It's possible, except that the contracts that you have with gold and with silver are not defined by space and time the way the way the oil contract is. By time, yes, but not by space. So if I want to take delivery of a contract of gold, I can take delivery of a contract of gold here in Colorado. You could in Switzerland, you can in anywhere in the world, you can take delivery of your contract of gold. It will go to a COMEX intermediary and then be shipped to you.
Okay.
There's
but actually the problem of the oil price was really that the storages was full.
Storage is full.
Because of the request and the demand went down due to COVID-19, right?
Exactly. So we're producing at a level the world has never seen before. We're at over 100 million barrels per day in terms of global production. That's on the supply side. On the demand side, we've seen demand shrink by close to 30 million barrels a day. And actually it may end up being closer to 40 million barrels a day as we get through the month of April. That's 30 to 40% demand gone. Supply is still running at a high level. What do you do with the excess? It's collecting. It's collecting in tankers. It's collecting in storage facilities. It's collecting in pipelines. And then when you get to the point where you're full, what do you do with it? And that's again, the limitations of the contract, particularly dealing with the place where it must be delivered, that affects the price, which is why I would say oil didn't go negative. The WTI contract, because of the stipulations to deliver in Cushing, Oklahoma, went negative. And in this case, you're dealing with too much supply driving the price. Where I think you could see complications with gold contracts is not on the too much supply side, but on the not enough demand, or on the not enough supply side, if that makes sense. Let's say everybody in the world wants to own 10 ounces of gold. There's not enough to go around. There's not enough to go around.
So that's actually very interesting because you just said, gold is a very, very safe investment asset, right? Because it's like a currency. It holds its value over a long time. Why are not more people holding gold then, when it is such a simple and easy to invest asset?
Yeah, I think a lot of this is education and experience. And if you look at most people's experience within the financial markets, it has taken place in a period of time. It's the only period of time in world history where this has been the case. But from 1971 to the present, money is just pieces of paper. And the PhDs, the men and women, the very intelligent men and women who stand behind that paper saying, trust us, we're going to take care of the management of the quantity of these pieces of paper. That's never been the case before, only since 1971 to the present. At any other period in history, gold has been treated as money. Now that gold is not treated as money, we relegate it to a commodity, right? Nobody really thinks about investing in eggshells. That's a commodity. Nobody, I mean, the average investor doesn't say, I'm going to buy orange juice contracts or pork bellies or cattle, not unless you're a farmer, right? Maybe. But in most instances, you don't think about gold because it's a commodity. Why would you take an interest in it? Are you a gold miner? What we've forgotten is the role that it played for 5,000 years as money, right? So this is why I say this has to do with education and has to do with experience. The experienced investor, someone who's very astute, still is going to relegate it to the category of commodity, not currency. And I want to elevate it to what it's always been, which is currency.
Okay. We just got another question. I don't know if you know that. If gold ETFs in Switzerland are based on dollars as well. So I couldn't tell that by heart. Maybe you know that. Otherwise, I would need to cheat to get the ETF up.
So you can buy gold in any currency.
Okay.
You can buy.
But there
gold.
are also ETF products available probably in Swiss franc.
Yes. So like I think the ETF product that was sponsored by the Zurich Cantonal Bank, I'm fairly certain that you can buy that in Swiss franc terms, versus converting to dollars to then buy that gold ETF. So you can buy it in any currency. Gold is typically quoted in US dollar terms, but this is, I would encourage you to think about gold in your local currency terms, because what it's going to tell you is it's going to tell you a story, and it's a very important story. I'm going to put something onto the screen which is a part of the story. Can you see this banknote?
Yeah.
Okay, that is $100 trillion. Right? That's the death of a currency. This is a Zimbabwean banknote. Be aware of your currency and how gold is priced in your currency wherever you are in the world, and it gives you an advantage in knowing how much your currency is losing credibility, how much your currency is devaluing. Because honestly, unless you're in a severe inflation, like the one they had in Zimbabwe, you may not notice it. You go to the grocery store and maybe things are a little bit more expensive each year, but it's not that bad. Watch gold. It'll tell you the story of your currency and its viability.
Another question that just came in from Tina, what would be the downside of investing in gold?
I think one of the downsides is opportunity cost. It does not provide interest. And the question is there someplace else where you could make more money today? So opportunity cost is probably the biggest downside for gold. You could see the price drop from the current 1,700 level to 1,500 or to 1,200 or to 1,000. And it's not as if the price cannot go down. The price does go down and it does go up. What I'm always interested in is how 1 ounce of gold relates to another asset, how 1 ounce of gold compares to the stock market, how many ounces of gold it takes for me to buy a house. I don't think in terms of an ounce of gold and the dollars that I can get for it, because I'm not interested in dollars. I'm not interested in Federal Reserve notes, which are managed by the Federal Reserve. I'm interested in building real wealth through time, which might be art hanging on the wall. It might be a home. It might be a farm or a ranch. I want things of real value that are an expression of wealth, right? And I don't think that cash is an expression of real wealth. So to me, I'm going to translate my ounce of gold or 100 ounces of gold or 1,000 ounces of gold. I'm going to create a relationship between other assets, a ratio, if you will. And when the ratio is right, and I can exchange my ounces for more shares in the Dow, or my ounces of gold for more acres of land, or my ounces of gold for more houses, which I may have as rental properties, then that's when I'm going to use my ounces of gold. The downside is that in dollar terms or in any currency terms, the price can fluctuate. Certainly, the price can fluctuate. But I think that the best way of approaching that question is opportunity cost. Could you make more money elsewhere?
But I really like just what you said, that you should look at wealth as something not as a banknote and cash, but really as something that you own and something that you invest in. So it could be a life goal. It could be a dream that you try to make come true, right? Something that you do for yourself and for a value for yourself. So I think that's a really nice ending. So thank you very much, David, for the time today about talking about gold. I think it was really fascinating because I never considered really investing in gold either than holding jewelries or gold glasses. But other than that, nothing is really gold. But I think it definitely opened some minds and made me at least think about looking into different products in the future, to maybe kind of like have 10% of my portfolio invested in gold as a
in a balanced portfolio. A certain percentage should be allocated to gold. And I think in the years that are immediately ahead, it's very important. It's not just a nice thing to have, it's an important thing to have, because we are experimenting in terms of fiscal policy and monetary policy with things that have never been done before. And there's no guarantee that the outcome is positive, whether that's the European Monetary Unit project or, there's many reasons why this particular time is a very important time to have that allocation to gold.
Definitely. And we just got the question, if you could maybe type in the web address of the vaulted page that you mentioned, the gold product.
Yep. So it's vaulted.com.
And that's your company, or?
It is, yeah. Vaulted is
okay.
That's correct. That's correct. We work with some amazing people in Switzerland who are the engineers, let's call them the brains behind it. And we get to be sort of the retail iteration, interacting with clients directly, solving any client problems, and providing consultation where if somebody wants to understand the markets, you can do it yourself using the Vaulted program. But included in the product offering is the ability to talk to somebody who's been in the gold markets for 20 years, 30 years, 40 years with our company. So you get the benefit of expertise and a guided process if you want more than do it yourself.
Perfect. And on that place, thank you also very much again to Rafaela, who actually introduced us to you, who is a SmartPers community member. So thank you very much, Rafaela. Also from my side, I think it was really interesting, and we got already a lot of comments about you being a great speaker. So I think that was a really interesting session today. Now just came the question again from Tina, if the service is available for clients outside the US. You told us that the Vaulted is also for Switzerland. So it is a global.
It is global. Because you're kind of constantly exploring ideas through your program, I would encourage people to listen on Wednesdays. We release our podcast. We've done this every week for the last 13 years, and it'll bring you a lot of insight into the financial markets. And then on Thursdays, we do about a 10-minute summary of what's happening in the gold market, a secondary podcast. So we have, if you can just go to weeklycommentary.com for the podcast that I do.
Yep.
And then Golden Rule Radio is the podcast that we do, a very short piece on the gold markets, and it'll help you with the pricing of the metal and perhaps a better opportunity in terms of when to buy this week or next. They look at some technical charts and give you some supply and demand things to consider. I think those are two very helpful resources if you want to continue the education process in this area. Perfect.
And I just added the URL into the chat so everyone can access weekly commentary easily for more webinars and podcasts and insights on gold as well. So thank you very much again. It was a pleasure to talk to you, and we wish you a sunny day in the US. For us, it's already night. So have a good day, and thanks again.
Thank you very much. It was great to be a guest. I appreciate the invitation.
You're welcome. Thanks. Bye-bye.